Welcome back, everybody. Today we are talking Bitcoin. We're going to cover some recent Bitcoin news. Then we're going to dive into why it's dropped off a cliff recently and then end with some chart analysis and price predictions. So let's dive right in. The first update I have for you guys is around the Fed. This kind of affects all markets, so it's relevant to any crypto conversation as well. But recently on May 3rd, the Fed hiked rates by 0.5 percentage point. This was expected, yet higher than what they normally do. They normally hike rates, at least based on past rate hikes, about 25 percentage points. This is a 0.5 percentage point, and it's essentially the sharpest rate increase since 2000, and this is the second of an expected 7 hikes this year. And so what Powell was saying, and that's the leader of the Fed, he added that additional interest rate hikes as high as a 0.5 percentage point. So what they did this time are still on the table, and we saw that kind of initial bounce, right? Because this is what the market expected, a 0.5 point. It was signaled previous to this, but I've been seeing this circulate around articles, and I think this is really, really interesting and a great point. After we saw that bounce, right? Clearly we saw that dive off of a cliff, not only in the NASDAQ, the Dow, Bitcoin, Ethereum, the whole market, right? And really I'm seeing, and this kind of encapsulates the sentiment from this side, but the only conclusion is you can draw that the market quickly realized that the Fed really aren't going to be able to control this cycle very easily, meaning it likely won't be a soft landing. Inflation is just too high. There's too much recessionary pressure. So that's kind of what, at least the hypothesis behind why, even though the rate hike was expected, it still turned out to be a bearish downside turn for markets overall. Now, moving into more Bitcoin specific news, I want to talk about the correlation of Bitcoin to the NASDAQ, because this is very, very important. A lot of the times you see the part of the argument of Bitcoin is that, hey, it's a hedge against inflation, it's diversification, against the market. But that hypothesis is slowly starting to kind of wane away and not really make much sense. So you can see this is kind of over the last 5.5, 6 months, you can see just an increasing correlation with Bitcoin to the NASDAQ. This yellow line represents 100% correlation. So if the NASDAQ goes down one day 5%, Bitcoin goes down 5% one day. Now look how close we've gotten. We've at our highest been at about 95% correlation up here, and steadily on average we're above 50% correlation. So it's just something to keep in mind, right? Because the overall markets are going to get constrained, are going to get hammered by these rate hikes coming this year. So even though a lot of people are thinking, hey, Bitcoin's a great hedge against, a market issue, it really isn't, because there is just so much heavy correlation between the overall markets and Bitcoin still. Now, I think that could change as Bitcoin matures, as it's more adopted widely. But right now, in terms of how you're going to trade Bitcoin, you need to make sure that you understand where the market is at entirely, because it's going to follow the NASDAQ and S&P pretty closely. So I wanted to highlight that because most likely the markets are going to struggle this year. So it's something to keep in mind for the price of Bitcoin. Now, this is another semi-bearish sentiment that I've been kind of tracking recently for Bitcoin. So this is kind of looking more at the on-chain analytics. Now, this is for the last 30 days. And mainly I want to highlight these two columns here, and we'll kind of dive into this in a second. But what's important here is that Bitcoin inflows to exchanges in the last day are at the highest level in 57 days, and Bitcoin held on exchanges at the highest level in 55 days. Now, why that's important is because the largest holders of Bitcoin do not keep their Bitcoin on exchanges when they're planning to hold. They only send their Bitcoin to exchanges, most likely when they are strategically trying to plan an exit or they're planning to sell immediately. So that's kind of what concerns me, right? There is an extreme influx of Bitcoin to exchanges rather than, let's say, being sent to a ledger or to another off-exchange wallet, which is where a lot of the bigger holders, the whales, will hold their Bitcoin. The fact that it's coming to exchanges tells me that there is going to be, and we've probably already seen some of this, but a lot of sell pressure and probably sell pressure to continue. And you can see that over the last 30 days, this is up 34% in terms of the inflows to exchanges, and the actual Bitcoin held on exchanges is also up 30%. So definitely something to keep an eye on, because just a couple months ago, we were seeing outflows from exchanges, but now we've kind of seen this almost inverse flip to a inflow to exchanges, which leads me to believe that there is still sell pressure to come, and it's probably indicative of some of that sell pressure we've already seen, but just something to keep an eye on. It's really easy to get caught up in kind of the bullish FOMO mania that is cryptocurrency, that is Bitcoin. Sometimes you just need to look at the data to kind of establish where we really need to be in terms of expectations. So now that we've covered some of that update, I want to dive into the charts a little bit here and just discuss, where some key levels are and kind of just the general outlook. So what you're going to see here, and I covered this in my last Bitcoin video, but we were printing a pretty textbook bearish flag right here. We can see the top trend line, bottom trend line here. But what happened, and I'll actually mark it here. What happened was we had the Fed meeting right here, and that had that, green daily candle. We bounced, and I think everyone thought we were going right for 41 or at least above 40. And then we had that massive sell-off, just yesterday and today. And like I said, it seems like it's mostly due to the still negative sentiment around the entire market due to the interest rate hike. So we have, at least for now, we have invalidated this bearish flag. We've broken out to the downside. What I mean by invalidated is that we're not necessarily playing out a bearish flag anymore. 9 times out of 10, what you see in a bearish flag is you see a bounce coming back to the upside, and then a one last rejection, and then you're breaking the trend line down. It doesn't happen all the time, and it's never perfect. Excuse me. But why I mention that is because I still do think, even though we don't have too much support baked into the chart right here, I think there is a decent chance that we see some sort of a bounce here. 35 is a really big psychological support for Bitcoin. People look at 35 a lot. I think that we could see that bounce off of 35, maybe come back up to this trend line, even stand on top of it. But what you have to understand is that even if we're breaking 41, we could all go all the way up into 46, even higher than that. And that still wouldn't mean, it still wouldn't validate a turn to the upside, towards, a bullish sentiment, right? We're still playing within these trend lines. It could easily just come back and boom, right? So even if we do bounce here, you need to be very, very careful, because we could still run, let's say, for example, we could still run 20 to 25% to the upside from, where we're at and still not be out of the woods, right? We could still just come back down. So you have to be really, really careful when you're deploying your funds. Not financial advice, but, never, deploy all your funds at once. The other thing that I would mention, why we're in such a precarious place if we don't bounce, is because we do not have a support built into the chart, right? Here's our kind of bottom line, at least right now. And if you look at it across the chart, it's never really been a support really since last June. And even when it was a support last June, we actually invalidated that here. So the problem right now is that we really don't have a proven support. We're kind of hinging on a 35, 36K psychological support. And if we don't hold that, the issue is that the next, support that's built into the chart, the next Fibonacci support, is right around 33K. Now, that is going to be a really, really tough line to hold, because if you sense the sentiment right now online just from moving, what was this just in the last 2 days, right? We dropped, 10, 11%. Think about dropping another, basically the same exact drop, right? Another 10, 11% again. Think about what that does to the sentiment of the overall market. That 32, 33K spot is going to be really, really hard to hold. And the issue there is now our next really key support is between 29 and 30K. If we don't hold 32.7, we're likely dropping below 30K. And that's honestly where I see us going, just with how hard the macro outlook is right now. I would not be surprised if we see a 27, 28, 29K Bitcoin this year. Now, does that mean that I'm overall bearish? Absolutely not. But it's just that the macro outlook right now is so hard, and especially when the Fed hikes interest rates, risk on assets, so growth stocks, crypto, NFTs, any risky asset essentially gets pummeled. And so it's really hard to go against history. There's rarely exceptions in these cases, but still, at the same time, there's a decent chance that we bounce. I've seen quite a few people put 100x longs in at this 35.5 area. Now, for a short-term play, that may not be bad, right? But I think long term, if we're thinking 6 months down the line, there is a really, really solid chance that we just kind of come up here, get rejected again, and then fall below that trend line. The next Fed meeting, I believe, is in June. So we're about a month and a half out. This is about when the next Fed meeting is. And I'm sorry I don't have the actual date lined up. But this is when we're going to get the next information about the next interest rate hike. To give you some context, this was, so March 13th was when they did that last one, or March 14th. So that was here. And we actually saw a decent pump after that hike. And we saw that go, up 25%. Unfortunately, we didn't get, that same reaction here when we hiked right here. We just saw, one green daily candle, and I think we maybe did like 5%. Yeah, we did about 6%, 5%. Following that Fed meeting, because we did, they hiked rates as expected at that 50 basis point. But still, the negative sentiment was just too much for the market to recover from. So to kind of just summarize things, we're in a very, very precarious place. 35K, 36K is kind of our support area from a psychological perspective. I think people are having a tough time believing it's a full-on bear market right now. And I think some of these trades are showing it. But with the influx to exchanges, with how bad macro sentiment is, with the Fed doing quantitative tightening, making money a lot more expensive to borrow, it's going to be really, really hard for Bitcoin to see an all-time high anytime soon. I think we're probably looking almost a couple years out at this point for Bitcoin all-time high again, maybe in the next halving event in 2024. But to summarize here, we're likely looking at, a potential, I would say, it's 50-50 whether we bounce off this. But I would be very, very wary of this bounce. I think that there's a good chance we get rejected and come right back below this trend line. If we don't bounce, there's a good chance we're headed right for 32, 33K. If we drop through 32, 33K, then it's kind of a lookout below scenario. We're dropping below 30, likely towards 28, 29. So just be very, very patient, be cautious, be diligent. There's no need to rush in this type of market. Dollar cost averaging never really loses, and you can never time the top or the bottom. So just be careful out there, guys. Thank you so much for watching. Hope this helped. Drop a like if it did. And let me know in the comments if you want more updates like this, or if you'd like me to talk about certain specific projects. But thank you so much, and we'll see you in the next one. Bye-bye.